Hey, this is Spencer with Octopus Life and Legacy. I just wanted to go ahead and get this term life insurance educational video out so that people understand a little bit more about term life. And so we're just going to learn about it. So next page, we're going to see what is a term life. It's the least expensive form of all life insurance policies. There only lasts a certain amount of periods, so you do have to pass away in that period. Some of the examples are 10, 15, 20, 25, 30 years that you can go out to. You can have expedited underwriting, so you don't have to go through the extraneous getting blood samples, urine samples. So you do have that expedited underwriting. It still does have underwriting. So if you do need to go through labs, you do have to go through labs. If you die during the term, yes, you get paid out. That's what it's for, is that you have that death benefit payout if you die during that 10, 15, 20, 30-year period. If you die outside of that, let's say you buy a policy for 20 years and it's 20 years in a week or 20 years in a day, that will not pay out. The policy has expired, it has lapsed, so you don't get paid out during that time. Doesn't build up any type of cash value. And I always explain it like it's renting a house. And so if you're renting your house, you don't actually own the house. You just get to use it while you're in that term, right? When you buy that house. So once you leave that house or you stop paying your rent and you get kicked out, for example, for a lapse policy, then you no longer have that asset. The asset has expired. It's no longer of value to you. It's exactly what a term policy does. And so it's not of any value to you once it is expired or you stop making your premiums and it has lapsed. You won't be able to get it reinstated unless you go through medical again. And then it's a lot harder because usually when you're trying to go through medical and get it reinstated, you usually have a medical condition. Had, for an example, one of my clients had cancer, let his policy lapse because he forgot to pay it, was trying to get it reinstated. The company would not let him reinstate unless he went through medical, and there's going to be no way that he's going to pass through the medical. So he paid all the 15 years of the term policy and he let it lapse after that. And then there was no way of reinstating it because he didn't pay his premium. So make sure you're keeping on your premiums and looking at that term policy. Because on this slide, term life insurance statistics, only 1% of term policies pay out. The 99% either lapse or expire. Usually these are really good for a certain period of time, especially when you don't need or you need a lot of insurance but don't have a lot of money buying it. So you buy a term policy for a short period. For an example, a lot of people buy term policies to cover their mortgages, short-term loans and businesses, or even for college expenses while you're trying to get your career going and you're still young in life and not don't have a lot of income coming in. 52% of US adults actually own life insurance. I mean, me in this profession, I wish everyone was insured. I know we can never probably get up to 100%, but I would love to see about 75% of people having life insurance. It's a great way to transfer wealth for the next generation. Also, it's a great way to protect and especially if we're talking about term life, it's a great way to protect for a cheap or inexpensive amount. So, how do you get a life insurance quote? Well, you just call me, right? 214-298-2000, or you can email me at spencer@octopodlife.com, or you can find me on Instagram, YouTube, anything like that. You can DM me and go through that. Most of the information that I need your name, I need your date of birth, I need to know what state you're in because each state has different payouts, so death benefits, and also claims. And so everything is going to be judged on your state. And then I need to know how much death benefit you want. So 100,000, 250,000, a million, 2 million, or how much money you want to pay. And I always get this comment from my clients is like, I want the most amount of insurance for the least amount. Yes, I get it. In term is the way to go. You're going to get the most amount of insurance for the least amount, but that's going to differ on how much you want to pay. So if you want to pay 20 bucks, great, that's going to get you a certain amount. If you want to pay 90 bucks, that's going to get you a certain amount. If you don't know what that and you want to go ahead and say, hey, I have to provide my kids through college, I have to pay off my house, I have this much in debt. I want to pay off my car loans and I want to replace my spouse's income for 10 years. That's where you get your death benefit amount. Then your health condition. Look, we all are in different standards of life. So you can be preferred, you can be standard or substandard. But because you're getting a quote at preferred or you like the price at preferred and you are a standard person, does not mean you are going to get the preferred quote. So just do every insurance professional or financial professional a courtesy is that you just tell us your conditions and we can kind of guess if you're going to be rated preferred or if you're going to be rated standard or anything like that. Biggest thing is going to be obesity. So your height and weight is going to be taken in effect. Diabetes, smoking, cancer, pre-existing conditions are heavily looked at through underwriting process. And so the better we have, or the more accurate information we have beginning the quote, the more like your quote's going to be like that at the end. Because I can give all of you guys a standard or a preferred quote, and these prices are going to look amazing. You're going to be like, oh, great, and then you get hit with a standard because you didn't tell me the correct health conditions. Then it's going to increase by 20%. You're like, well, you gave me this price. Now it's this price. I'm not going to get insured. I don't want that. I'd rather you have insurance. And so if we could be accurate as quickly as possible in the beginning, then we can get everything done. This is going to be an example of a quote. So this is of a male, 40 years old in the state of Texas. It's a 30-year term and $1 million death benefit. I put that purple banner over there because these are some of the carriers that we are able to get from to contract, but I don't like free advertising, and so I cross them out. And so the pay options, of course, are annual, semi, quarterly, monthly. Sometimes you'll get carriers that are least expensive. Let's look at the first two. I know the first one and I know the second one. Monthly is $90.88, and the other one is $91.47. And then it keeps on going up depending on the carrier. Depending if you like the carrier and how they're rated or how they're preferred on, let's say, financially, you might be like, okay, I'll pay the extra 50 cents to go ahead and go with the second carrier instead of the first carrier or vice versa. So make sure you're looking at the carriers, making sure that they have good financial position other than just looking at price. Because if you buy the term policy and the company goes bankrupt, you might not be able to get paid out on your death benefit that you've been paying in. So look at the financial strength of the company is super important. But for $1 million, you pay in $90 a month. Annual is $1,000. So you paid in for 30 years. That's going to be about $32,000 for the total cost of this policy. And if you died within those 30 years, then you get paid out $1 million. So you put in 30, you get out $1 million. But if you put in 30, don't die during the 30 years, which that would put this person at age 70, then that $30,000 was like renting the house. You used it. You didn't actually need to sell it and then or buy the house, and then you can get that. Something a little bit more advanced, you can convert the policy, and each carrier is going to have different stipulations on that. But let's say you get a health diagnosis, you get cancer, you're in policy not year 9 of the year 30. You need to convert it so that makes sure you definitely get paid out that $1 million. You can get that done. But that's for a later date. This is just the basic term policy and going through that. Last is life insurance doesn't have to be scary. I am here to walk you through this, making sure everything looks at that, make sure everything is correct. That's my job, is to answer all of your questions. Doesn't matter how ridiculous you think your questions are or simple or anything. I've actually had clients that didn't know what a death benefit was. And if you're like, well, I don't know what a death benefit is either, well, let's talk, because there's a lot of information that is not explained during schools or your parents didn't teach you or anything like that. That's why I'm here. So is to provide that education. So give me a call, 214-299-8200. Go on my Octopo Life to learn more about these little series that I'm going to go through. Educate yourself a little bit more. give me a call, ask those questions. And if a term policy looks good for you in your situation, then let's do it. Let's protect your family. Let's make sure that something is there. Let's pass on some good wealth to your future generation. And just like a little snippet of what I did on a post earlier today was, be sure that your beneficiaries are either not as minor beneficiaries. Put it as a trust or put it as an adult, because going through a minor beneficiary is troublesome when it becomes to paying out that death benefit. And so I just wanted to throw that in there. I know it's not in the slide, but I know it's a little gold nugget that you guys will be able to take away for. So thanks for watching over this, and we are all set. So give me a call, 214-299-8200. Shoot me an email, Spencer at octopodelife.com, and we should get you a quote, making sure that you're covered. If you already have a term policy and looking to convert or looking if see if prices are better, usually they're not, because it's based on age and in health. But let's say you did get healthier over the years and you got rated substandard and now you think you're standard or preferred, it might be beneficial to look in these quotes. So always give me a call, shoot over your questions. I'm happy to answer all of these. Let's look at a quote for you so that make sure that your family is protected and that everything is taken care of in case you do pass away. Look forward to speaking with you.